Well, FedEx announcing their third quarter results just moments ago. Helane Becker of Jesup Lamont is a #1 ranked analyst by Bloomberg for her coverage of FedEx, and she joins me now by phone to go over the numbers. And Helane, you know, they came out, they beat Wall Street estimates, raised their guidance. Was it not enough, though, for the investors?
Yep, I think that the reason, well, there's two reasons why I think the stock is down. First of all, it's been up about $7 in the past week as people have been raising their numbers. And number two, I think the other thing, if you look at the $1.17 to $1.37 for the fourth quarter, the consensus was $1.26. So they basically put the guidance right on that number.Maybe it'll come up 3 or 4 cents as the analysts who are below that range or the low end of the range bring their numbers up. But they didn't, you know, the 360, 380 for the year, consensus was right around 365-ish. So, you know, I think just looking at that, people were probably hoping they'd come to the higher end of the range or go even above for the fourth quarter. But, you know, I think they're pretty well setting things up for another positive surprise.
Okay, perhaps a bigger positive surprise. That's what they wanted this time around. What about the margins, though?
Yeah, so the margins were a little bit better than we were expecting on the Express side. In fact, revenues were higher than we expected. We had Express revenues up 2%, and the actual number was up closer to 7%. So, you know, that means International Express did phenomenally well. I was just looking at those numbers.
Right.
Even Ground, we saw an increase in freight and ground revenues. Freight revenues up 14%. And Ground up 7%, and you know,
which is a good sign because in this recession, Ground has really been hit, right?
Yeah, it is a great sign because also remember that you know people have been concerned about inventories, and clearly you know retailers especially have been rebuilding inventory, so that's another positive development. Express margins were up almost 5%. You know,
Helane,
huge positive.
I want to ask you though about the stock because I was looking through on my Bloomberg, comparing how FedEx has done with its chief competitor UPS. And FedEx, in fact, the stock has more than doubled in just the past 12 months. UPS has only gone up 36% in comparison. Why is this? Because both of these companies are big bellwethers for the economy. And UPS, I mean, what, they see like 6% of their GDP run through their system?
That's what they say. Yeah, you're right. So FedEx is much more international focused than UPS, and especially coming out of China. FedEx has much more route rights in that part of the world than UPS does. And there's no way for UPS to really catch up in short order, and I think that's why FedEx tends to outperform UPS.
Okay, and quickly, Helane, the labor issue with their drivers, is that going to be an overhang?
Well, it's been an overhang up to now, but it looks like on the FAA reauthorization bill, it's finally going away, at least for this cycle.
Okay.
So,
all right. Well, certainly still something to watch, though, with FedEx. Okay, Helane, thank you so much for joining us. Helane Becker, analyst at Jesup Lamont.